All right. Welcome to the end of week for today. So today is a Saturday, so we do end of week review. This past week we don't do any end of day review because our time conflict. We have other commitment, so we just do end of end of week review for this week. So this week we have the CBI data come out at 8:30 Eastern time on Wednesday. So that is the biggest one of the biggest high impact news or liquidity injection or liquidity engineering in the market, and we can see we look at the tape, we can see how it manipulates liquidity. Yeah, that's that high impact news for this week. By the way, we are in week 11. Next week gonna be week 12, week 11. So that means we have 2 more weeks. We're gonna close out the first quarter of the first quarter of 2023. Because we misspoke. 2025. Yep, first quarter 25. Next week, yeah, for this week, we don't have any option expiration, but for next week, we're gonna have on the 21st right there. That is the because March is like it not only I think in March, in June, September, and December, that's the quarter. So the expiration for the option is have a huge impact on the end of quarter right there. So let's see the end of month, right? End of month, and then you have where is say end of quarter. Oh, it's right here. End of quarter. They color code this one. Very interesting, huh? Very interesting. We don't see that. Oh, maybe the 28 right there. That's the color code. Anyway, we get back to our topic. So next week we're gonna see the FOMC on 18 and 19 of March right here. So FOMC right there. Yep. All right, now we go into the chart. One thing we want to bring up real quick that we've just see that the high time frame really the one that we need to look at, right? Because we trade on the 50-minute time frame. Basically, we are swing trade right there. We want to catch the move in the market. But if we look on the high time frame, it gives us a very clear that where the market heading to, and it fit into our setup or pattern right there, which is reverse to type 1 and reverse to type 2. All right, here's the monthly time frame, and we see it's so clear. All right, so we have a note right here. So we see that there are 4 breakout at 59.27.50. You see that? That's the level right there. It's very interesting because you see this candle is not a, you can call it consolidation move, right? Consolidation or a non-expansion move. Because the candle formation only have 2 kind of candle. One is expansion move right there, and the other one is called consolidation or liquidity engineering or range, right? You have a different terminology right there, but they all have the same impact, have the same pattern, which is a non-expansion move. You have expansion move, and then you have non-expansion move. So we just learn over the time that pay attention to the range, either the high, the low, and basically the non-expansive move is where you have a candle that have a wick, right? The wick is longer than the body of the candle. Yep, that's where we pay attention and mark the level right there. That's where the algo reset the direction or engineer liquidity before the next big move take place. That's what we observe and we learn. So go back here, we see the level at 59.2750. You see right there. We look at the this is the monthly, right? Because we want to see why the market moved the way it is, and we can see the seasonality of the market. So basically, watching out for March, right? Month of March right there, where the market went down right there for a down close year, if that's possible. So we can see that the high of June, so when the mark of this year revisits the high of June last year, it gives us something to ponder right there. Alright, before we go any further, it's very beneficial for us to go back to the basics, go back to the baseline. And here's what we have. We have a baseline, which is a very simple model. If you would like to call that a model or pattern or setup right there. Basically, it's very common. It happens every day, every week, every month. We see this pattern everywhere. We just need to be patient with ourselves, wait for the setup. Don't just click, all right? You have to exercise our patience. So in this setup, we see that whenever the market expansion, right? After the expansion, there are two scenarios. One, it's gonna reverse. Two, actually three, right? Expansion, and then it's going to go into retracement or reversal, and then it go to because reversal can trick at expansion also, or it go into continuation, right? So actually, if you generalize the only two options, either you're going to go to expansion, consolidation, or a retracement, or reversal. Then it can continuation right there. So basically, for this reversal or retracement, we have this setup called type 1 is on our left and type 2 is on our right there. It's very basic. We simplify this, right? So for a short setup up here, for the type 1, you see it break the level and it tests from above. At least one, right? We simplify. In reality, if we look on here, we see it tests from above. How many times? 1, 2, 3 times. So we see that October is set up this level, 59, 27, 50. And then November shoot up, it broke the level. But for the last 3 months, from December, January, and February, look at that. It what? It just touched from above that level 3 times for 3 months in a row, and boom, March. In March, it break it. You see that the setup right there? So it's type 1 reversal right there. Break it, tap from above, boom, reverse. So that means in this case, it tests from our observation. The more it tests from above, and if it break it, it will break very hard and very strong. And we can see that phenomenal, or that's move is really happened in this case. So it's a 4 breakout right here in the short setup. We really miss this when we normally we look on the monthly, but for the last couple of weeks we forgot to look at the monthly. That's the reason why we don't see it coming. We're so caught up with the low time frame. So that is the reason why we need to remind ourselves to look on a high time frame. Sometimes we're not sure where the market heading to, then look on a high time frame to see it. And if we don't see it, then just patient wait until the market show its hand. So let market work its way. That's the beautiful right there of being patient. So look at the monthly time frame, we can see it's so simple. Patient watch for this, and as soon as it broke down this level, the 59.27, then 100% it's gonna be 4 breakout right there. It's gonna be going down, right? So the 4 breakout is the first leg right there. 4 breakout, and the 3 breakout is where it create the next leg down, and then you have 4 breakout again, then it will reverse. It's just the circle right there. But first look to see on how it manifests itself, right? So we want to track down at 59, 27, 50. What day is that? It break it down, right? If we look on the daily, we see that on this week, what? Okay, so this is the monthly. The monthly, it manifests itself that on the weekly, the first week of March is broken down. Right? Even though the last week of February, it did break that level, but it's close above that, right? So we want to see what is going on right there. So basically on a monthly time frame, we see a 4 breakout at 59, 27, 50 level. But it manifests itself into the low time frame, which is weekly right there. We see that it's not a 4 breakout on a lower time frame, which is in this case is the weekly. So from monthly it's a 4 breakout, but on the weekly it looked like a real breakout of the level before, because the week before that, this week, right, for the weekly candle, then every candle is a week right there. So this week is the last week of February. Let's check it out. What week is that? So here's the calendar. This is the last week right there of February. So right now we have week 11 right here. Then week 10. Then this one is week 9. So the week 9 fall into the last week of February, where we see that it's break down to that level, but it's kind of retraced back, it go above that level. Then the following week, boom, it go down and it break it. It go down and it will break out of the level. So basically a fall breakout on a high time frame, it become a real breakout on a weekly time frame. Now we want to see what happened to the lower time frame in the daily time frame. Let's take a look at the daily time frame. So basically we try to drill down from monthly table. We mix both right there. Monthly time frame, go down to weekly, and then we go down to daily, and then we go to our favorite timestamp, which is 15-minute time frame. So at this level, at the 59.27, we can see that on the daily time frame, it become a real breakout. You see that? So a fall breakout on the monthly, it manifests itself on a real breakout on the daily. On the weekly, you don't see that much. On the weekly, you cannot formulate a real breakout or a fall breakout. Basically, it's hard to say right here. But if you jump to the daily, you can see clearly this is a real breakout. In this case, first leg down, and then right here it's a retracement, and then boom, next leg down. So it's a real breakout. How beautiful is that? The high time frame in the monthly is a fall breakout. Right. So then it become a real, we make a note right here. Then it is become a real breakout, which is neck leg down in the daily time frame right here. It's neck leg down. So put a note right there. In order to, on the daily time frame, in order for it to become a neck leg down, you have to put the first leg down, and the first leg down is a fall breakout. Remember, the fall breakout always happen at the reversal right here. It's the reversal right here at the daily time frame. You see that level right there, 6123.25. That's the first leg down, and it creates a fall breakout. You see that? It's so critical. If we mark this level, or we mark the candle right there, it still create a fall breakout. But we mark the higher level, so it's less expensive for to go in right there. So in this case, yeah, the next question you're gonna ask, so we candle with two to mark, it's very subjective right there. So we have to, there's no way you can quantify it, but it's just eyeball right here. You see that level so clear. You can mark out this level also, but in this case we choose higher level, so the entry first will be, the stop loss we not too big, but if you choose entry at this level, your stop loss gonna be very big. So to this level, it make more sense. So this is how the first leg start. in order to break down on a high time frame right there. See that? That's the daily. Right here is on the monthly right there. See the monthly? That's the level 59.27. It's a 4 breakout. But if we look on the daily, at that level, it becomes a real breakout, which is the next leg down right there. So it's very critical for it to look on high time frame in order to see where the liquidity gonna draw on. That is the ICT terminology right there, or it's just where it going to, what direction the market likely gonna go. All right. Remember right here we talk about probability. Right? No one knows for sure 100%, but that doesn't matter. Only 50% we still come out good. At least that we manage our risk, right? If we lose, we just lose 1 unit or 1 R. But if the risk reward ratio is 1 and 2 or 1 3, we still come out good. So there's no reason for us to be picky, to be perfect on the direction of the market. So right here is so beautiful to see that on high time frame how it manifests itself in a low time frame right there. Yep. So we look in the daily, we see the pattern much better, but on the weekly we don't see that much there at this level. We only see that it tests from above, right? Then the next logical step is gonna break that level. Yep. But anyway, if you mark this candle, you can see the pattern also, right? So here's the real chart right here. If we mark this level high, we can see on weekly that this level is create what? Right here, if you can see it, make it bigger. So you can see that the level right here, the high is 53.25. 53, not 50. So you can see that this week, the last week of February, where this got broke, and then the next 3 weeks, it come down. So you can see right here what pattern right here. We have test is the type 2 reversal right there. Test from below, break and reverse. That's the type 2 we are talking about right here. It's a type 2. You see that? Test from below, break and reverse. That is type 2 reversal in a short setup. That's exactly happened right here. See that? Test from below, break and reverse. So when it comes down to this level, it will never come back. But the trick right here is how we entry in this, right? When it touches level, it fell, then the level right here, then we can entry at that level. Let's see what level is this. Okay. Let's go with the glow of that. So what is the glow of the candle? 60.29.75. 29. All right, so then now we look in the daily to see how this play out. If we see on the daily, you can see that the level right there, So basically, it break down that level, and then it's the 24. That's that is on a Monday. Right? Friday is the 21st February. Right here, Friday, right there. So Friday is break that level, and the Monday is the 24 right there. So Friday it break that level, the weekly level right there at 51 right there. But we want to see that we put a an entry right here, a sell stop in this case 29 right here of this candle. Or if we want, we can put a sell stop in here. We have a better entry right there. So let's see what is 50-minute on the Monday of 24. Let's go to our 15 minutes to see where is the 24. So we are 10 days. Let's do 90 day. 24, 27, 23 right here. Okay, let's drill down 23, and then 23, 24 right here. Is that right? 24. Yes, so 24 right here. Still 23, but the 24 start in the evening of 23. So even though it's right here, so you see that. Let's drill down right here. So it's a Friday, and then a Monday. Boom! It go above that, and then boom! It coming down. You see at 9:30. At the 9:30, it looked like it gonna be break and reverse, but it came down. Right, so we can put the entry right here, the sell stop right there. Sell stop at what time? Yeah, so it's 5 point right there. It is 1 hour right there. So we can put a sell stop right there. That's how beautiful it manifests itself on a Monday. So we either entry at this level 53, or we entry at this level, which is, you see that it broke a level real hard, and then it retraced, and it make a second leg down right here in the PM right there. Boom! It come down. It's come down. Yep. So go back to the weekly, we can see that the level 56, 53, that's where we can see. If we look at the this level on the monthly, it doesn't manifest itself well in the weekly, but it manifests itself in the daily. That's the trick right there. On the daily, on the daily we see that level manifest itself by a real breakout setup. Basically break, reverse, and then boom, neck leg down. That's the typical of the real breakout, second leg down, beautiful right there. But we don't see that in the weekly level. But if we look above one level right here, Right after expansion, you're gonna see a retracement. This is the retracement step right there. And you see how accurate it is. So this candle is a retracement right there. And mark the level, we can see that this is a fall breakout. Yeah, let's do this. All right. In the weekly, we can see that it's a fall breakout. Let's remove this right now. So on this weekly, we see that is a fall breakout type 2 right there at the level. Break, a test from below, break and reverse. That is the beauty. But at that level, we don't see that. We only see it at that level. Yeah, let's take this screenshot. For our, we take the note right here. Yeah, right here we see it at the weekly. We don't see that, but if we market level, we can see the fall breakout. So let's do that. Let's fix this level a little bit. Right, it's the March and June. Alright, so let's annotate what we see right here. So on the high time frame, which is monthly time frame, right, we look on the monthly time frame, we see a fall breakout reversal type 2. Is that type 2? No, it's type 1. It's very strong. Right? Type 1 is even better than type 2. It's very more reliable. At the level 59.27.50. So basically you have break test from above 3 times and then reverse in March. Right? You have a break on November after the election, and then from December to January and February, it's just consolidation or liquidity engineer right there, and boom, it reverse. That's the idea right there for reversal type 1. The key right here is, you see that breaks test from above. In this case, we have 3 times, 3 months. That means 3 months for liquidity engineer, and then boom, it go down. It go down and flush all that sell side liquidity. Looks so, so juicy right there. Boom, it flush. But at the level 59.27.50 on the weekly, you don't see it much. But if you look above the level at 60.53 on a weekly, you can see that it already shows a type 2 reversal. Very beautiful right there. So right here, you can say on our annotation is M, capital M is the monthly right there. But on a weekly, the fall breakout type 2 happened at 53.25 right there. And it touched the level on the first week of March. The last week of February is already revisit level, basically test from above right there. So put our annotation right here. Alright, so basically we also have fall breakout, but not at the level of the monthly, the level above that, because the low time frame happen first. Always have happen in the higher level first. If we look, let's write out the reversal type 2. Right? In the monthly we see type 1, but on the weekly we see type 2. Type 2 is right here. Break, tap from up, reverse. Yeah, reversal on They put a note right here. The reversal happened on is that what week is that? Hold on, let's see. So the week right here, when it break, when it reverse, is week start on February 17. So what is our February 17 right here. So is okay. So let's count out that reverse engineer right here. So basically we are in week right here 15. So we are in week 11, and then it's week 10. Then this week is week 9, and then this week is week 8. Week 8 in February. Yeah, week 8 right there. February 15, week 8. February, week 8. It breaks down this level. Let's see on the daily. So week 8, right? Week 8, February 17. Let's say that we have to put down the level right here, which is 60, 53, 25, and put a note right here. It's a week. Week 8. All right, week 8, 08, February 17. Okay. Put a note right there. Because you put that right there, should be good. In here, the reversal happened in March, right? Yeah, the reversal here on March, on a Monday. On a weekly, you can see that it start happening in week February right there. Week 8, February 17, start February 17. Let's see on the daily what happened at the level 60, 53. Right here, 60, 53, we can see that it break it on Friday 21st right there. See that? That's amazing. But if we look at this level on the daily, you don't see the setup. But if you look above that, you will see that setup, the reversal. In this case is type 1. So basically you can see that whenever you go to the lower time frame, you have to look at the above, the level above that to see any setup right there. So you know that if you see the reversal, then you know that it's gonna target hit that level. That's how we reverse engineer right there. So if we look at the daily time frame level, we can see that the 4 breakout happened at the level above weekly level. So it's about 61.23. That is the 4 breakout reversal. In this case is type 1. Break, test from above, and boom, reverse. That's the reversal type 1 right there. 61.23.25 on D1. D1 is mean daily right there. Alright, just recap. So that we have a 4 breakout reversal right here. We have 4 breakout reversal. We have a 4 breakout reversal for the weekly at 60.53, type 2. And below that, it could be the monthly at 59.27 is type 1. So it's very correlate right there. So capture right here. So you have reversal, reverse. So type 2 on the weekly is, we color code. We see that this is the daily, the green color right there. And then you have a orange and bubble. Bubble is for the month. We color coded so easy to recognize. So 53.25, which is on weekly. And then we have a 4 breakout reversal, type 1 at 57.21.25 on the monthly. Right, monthly we put capital M right there, because the lower M we annotate for a minute, so the big M is for monthly. To separate to them, yeah, right there. Very interesting right there. So we look on the low time frame to have an entry, and then on a high time frame to see what kind of break happen to be target right there. Alright, let's save this one. Alright, here's we put together from monthly right here, monthly to weekly and to daily, and then to 15-minute time frame. So for the monthly, we identify the 4 breakout level at 59.27. we drill down to the weekly, then you have to go up to the level 53 in order to see the setup, which is a 4 breakout type 2 right there. For monthly it's type 1, but when we go to weekly we have to go up level and we see type 2. Then we drill down to the daily, we have to go up level. In this case is another 100 point right there, 61, 20, 25. We see a type 1 right there. So basically we summarize right here. For the daily, we see a 4 breakout type 1. For the weekly, a 4 breakout type 2. And then for the monthly, is 4 breakout type 1. Now we go to the 50 minute time frame, which is our favorite time frame. We trade on 50 minute time frame. So we see that happened on Friday. We see that it broke down the level 21, 23 on a daily right there. See the daily, that right there. So you see that the day before, it tapped from above. Thus it's a Thursday. Thursday you see that it opened at 9:30, boom. It break and 9:45, huge break at that level. But then it retraced. So the whole trade here is just retracement before it make a huge leg down. And you see at 9:30 it broke the level already. And if you look at the candle on a 15 minute time frame, which is a 61.21 right there, 2 points below that, you can see that it also tapped from above the level. Then we can put a entry right there, which is a sell stop. We can ride this huge down movement. If we miss the first move, the first leg down, then we have a setup right here for the second leg down. So in the PM, in the AM, we don't have a setup on 15 minutes, right? You don't have any setup. If we use the setup right here, which is a 4 breakout, type 1, type 2, in the AM, in the PM, we don't see that on 15 minutes. So we may have to let it go, but in the PM, you have a beautiful setup right here. So it's the prior day low right there. You see that break prior day low and then boom, retracement right here. And you mark the low of the candle that break that low. In this case it's 9:30, 9:45, 10, 10:15 right here. 10:15 is break. Then you see the liquid engineer right here. 10:15, 1, 2, 3, 4, 5, 6, 7. 7, which is almost 8 candle. So it's almost 2 hours. Basically right here is, so basically the consolidation or liquidity engineer right there, or retracement, then boom, at 12 o'clock you have a breakdown that level 60, 95. You see that? You see the setup right there, right? It's a real breakout. If you call this, it can just be breakout right there. Or you can call it a 4 breakout, because you see that it break, tap from above, 1, 2, boom, reverse. That's type 1 right there. Yeah, but if you look at the first leg down, then you can see that it's a real breakout of the level right there. Either way, it gives you the setup. And next leg down, boom. There we go. Yeah, so basically, if we miss the first leg on the Friday, February 21st, then we go for the second leg. It's also huge. The level we watch is 60, 95, 25 right there. So it's the for breakout reversal type 1. See, break, tap from above, 1, 2, boom, reverse. Or you can call it a real breakout also, because it's the second leg right there. Whenever you break and reverse back right away, looking for a second leg down. If you see that the first leg down is huge, then the next leg down gonna be in play for sure. Because sometimes we mistaken right here is a reversal, right? We see break and reverses. We thought that gonna be a reversal, but it's not. Looking for that. Yep. Look carefully. So beautifully that, you know, from high time frame we do down to the low time frame, we can see how it manifests itself. All right, we have about 10 more minutes. Let's look one of this scenario, and then we wrap up here. Okay, so go back to our daily time frame. We see a phenomenal right here. All right, so this mark, this one is Friday, February 28th, and then we have a Friday right here, March 17, right? Let's go back to check the calendar. February 28th right here, that's Friday, and now we have another Friday, which is March 14th. Right, look at that. What do we see here? We see the reversal. We see that Thursday is a expansion move. And then Friday is reverse. Now go down to the 15 minute to see what really happened. To see if you can see any pattern that we can pick it up. All right, let's compare. The last time we see the reversal. It happened on February 28th. Now let's look the 28th. Yeah, we have our screenshot right here, and look how it's happened. So here's how we start out on the 28th. So you have a Thursday is expansion down and break the level 59.06 right there, and then you can see that is how it start out on Friday. Here's the weekly. Okay, so that is how it start out right there. So it's open right there, and then in Asia it come down and it rise above the open at 18. All right, that's before. But at the end of the day, we see that reverse right there. So it's a type 2 reversal right there. Just from above the level 59.48 and then reverse. We want to see how it looked like in, yes, I'm looking for the two level right there, 59.06 and 59.48. Very interesting. You see that on Friday it's open in the bottom of the prior day PM right there, and then boom, when it go down and rip the sell side liquidity, the low of that, it reversed, but it reversed in kind very late. You see that? That's the reason why it's explosive move right there. It late in 2 p.m. 14 hour right there. We see the setup right here. It's for breakout reversal type 1 right there. It's so beautiful when we mark out that level, which is a candle after expansion. In this case, not really expansion, but let us accept that for now. Yeah, because 9:30 is a very long weeks. Okay, so we see that it's reversed right here. But for this week, we have the same reversal. So it's the weekly right there. You see that? Yep. But the reversal this week is a little bit different. If you go down to the 15 minutes, you see that it opened maybe in the middle or around the high of the PM. The last week is open down here. So that means that there's no more sell side liquidity right here. So it's not gonna go and rate the sell side liquidity before it reverses. So it's a little bit different. But here is the drill down on the 15 minutes. You can see that by the time it's open at 9:30, it already way above the 18 right there. The week before, the reversal on the February 28 is down here, and then after it's reached the south side, boom, it reversed. But here the reverse is already stopped very early. You see the 9:30 and the retracement at 10, they all above the open of 18 right there. So basically right here it's just retracement, and then boom, it go up and it reverse. It did hit that level right there as 56.41, right? 56.41 right there. That's the resistance level. Actually, that's right. I mean, the reverse level is 55.71. That's the level that we aim right there. You see that? Test from above twice, break, and reverse. So the reverse level right here, 55.71. So we see right here, it tests about that level 4 times. 1, 2, 3, 4 times right there. And it failed to break it. See that? 4 times and it failed to break. You see, it failed to break because it failed to break at 51.71 4 times. 4 times attempt to break it. And you can see that the 830, the 930 is very bullish right there. So when you see this, don't panic. It's a good chance to go in along. We saw this, but we kind of nervous because we haven't seen this before. Because the candle at 15 right here is supposed to break this, but it fell. It tested from above. If it tested from above, and this candle had to break it. If it not break it, then for sure it's gonna be a reversal in play. And we did. I think we did take the trade right there. Let's see the trade we take. Okay, here's the Friday. We take the trade. So the first trade we go in is 5 minutes after the 9:30. So basically we see is a retracement and then it's gonna expansion. So that's our anticipate right there. So we're going at 9:35, 5 minutes. We don't see its breakdown. At first, it looked like it's gonna, retrace. It's gonna make a down move, but it did not. So we go in right there, and then boom, we add more contract. All right, and then right there, we anticipate it's gonna go up here, up there, right? We thought that wow, it's gonna be reversal, right? That's what we anticipate. We look on the daily time frame. We thought that it's gonna reverse, but the mistake or the lesson we learned is that it not reverse right away. It did not reverse right away. It did not reverse right away. You see that? It did not right away. We anticipate the reverse correctly, but not right away at 9:30. You have to have a retracement. Look at that retracement, so ugly right there. So that's the beauty of trading, that you don't know what the next move the market gonna make. However, right here, if we take quick profit, then fine, perfect. Let's see how we handle this trade right there. So good profit. Let's see, we take it off. Boom. Wow, it's almost there. So 11,000 right there. Let's see, hit that level. Boom. Wow. So it's very critical. As soon as we see that it's just flip right there, we get out. Yes, I think we get out at that level. So the profit at that is 15.11. Wow, 11. How come it's go to 15,000 and then on? But anyway, we get out. So that is our first trade right there. Beautiful. Okay, let's see how we do the second trade. Okay, so we missed the cash rate. We did solve it, but we're a little bit nervous. You know what? Because we haven't seen this pattern before. It's very tricky. You see the fellow gap up, fellow gap down right there, and we see that this guy did break the sell side. So it's very bullish right there, but at the same time we see test from above. It's not good when we see test from above. And then we can see this guy is kind of inside bar right there. Then we thought maybe it's not finished the down move, but now we learned the lesson that if this guy fell and this guy explosive, then going right away, especially at the high of this candle. If it break the level, then go long. We learned the lesson right there. So basically the whole thing right here, we just stay at the sideline. We don't engage right here because we don't know what to do with this. Perfect. But right here, as soon as we see this guy flip very quick, then we know that the short setup gonna come in. So we're going right away. That's the next trade for us. Boom. We take quick profit. You see that? We add more. We add 10 contract, and then we check out right away. As soon as profit, we check out right away, and we leave one contract run right there. And perfect right here. Never miss this trade because you see that break and test from above. That is a type 1 reversal right there. So we're going to go short right away. Boom. We take quick profits. We add 10 contract. As soon as it go down, we take quick profits. So boom. I think we haven't add more contract. We'll let it run. Boom. It hit our target right there. So perfect. If we leave a little bit more, we can get more. But that's our second trade right there. So the long trade we do right here and get out, and then now we do a short trade, and let's see what we do next. So right here, yeah, we go short right here. A little bit tricky. We see it's like double top right there, and we mark this candle. We see that is the candle that we believe that the algo is reset in order to go change the state of delivery. So we mark right there, and we see this one flip. So definitely the target gonna be at least the low of that candle, which is around 56.23 right there. So let's see how we handle. Boom! It come back and it take it out, but the good thing that we only engage one contract, and then it flip again. So we go short again, and this time it goes to our favor. And wow. You see that? A little scary. But anyway, it goes to our favor. We take profit right away. You see that? When it hit target, we take profit right away. Alright, so we engage again. And we take quick profit again. Boom. You see that? It flipped again us. That's fine if people run it. So we only one contract separate. And then the next trade, we see the long right here. You see that? Right. Break, All right, touch from below. Oh, we go long right there. Let's see, and boom, we take quick profit right there. Very good. And then boom, it come back, it take out just one contract. So very beautiful execution right there. But here the another thing. So right here we thought that, oh wow, it touched from above. This guy failed to break it, so it's gonna be reversed right here. You're gonna make another leg down. You see that? We should take profit right here. But anyway, we did not do that. Let's see, did we take profit? Yeah, we did not. And let's see, it come back, it buy it right there. But after this flip, we know for sure that this trade gonna be go up. So we maximum our side right there. We go in 15 contract. Boom, boom. You see that? So right here we go to the daily time frame. We see the level right there. Want to see how where it go. So right here is almost hits our contract, but you know what? We decide to take profit, and we did take profit. Yeah, we did close out. We take profits. Take profits. We did take profits. Right here, yeah, we did take profit. Finish. But if you let it run, it will go to our level. Right, the level we aim is around 56.37. It did hit that level. 56 right here. Where's that? Right here. Boom, boom. Yeah, right. 56, 30, 35. This is the candle that we get out. 56, 35. Is that right? 37. 56, 37. Let's draw that level. 56, 37. Okay, so just right there. Yeah, 57. So if we hit the candle after the next candle, so we have to go through the retracement right here, all the way to 56.23. If we stay back, we have to give back a lot right there. 23 is almost go into our entry right there. Yes, go back exactly our entry right there. Oh, we cannot sit through that. We're glad that we get out. But anyway, we wrap up here, guys. Thank you for your time and interest. We're always grateful for this opportunity. Day by day, little by little, we're getting better and better. We do what we love, and success is coming our way. Have a great weekend, and see you next week. Bye for now.